Hey everyone, Retire on Dividends here. Back to make an update on my options trading, and how I've been doing. Also at the end, I will talk about how I've been doing with my swing trading. That part's pretty quick. But in this video, actually, I want to go over some of the basics of options. I should have done this in the first video. But whatever, I'll cover it now. And this may look familiar to a lot of you because I did make I guess, options basics video out there, but I'll do a quick summary in order to not bore you, but I just wanted to get this out there. So let's just keep options simple. When you do a buy call, that's bullish, okay? When you buy a call, you want the stock to go up, then you'll make money. When you buy a put, that's bearish. All right, you buy a put on a stock, you want the stock to go down and you can make money, all right? I'm not buying though, I'm doing the selling. So right now, I've been selling puts. So selling a put is bullish, that's why there's a bull and that's why it's green. And I want the stock to go up. And if it doesn't go up, I have to get, I get assigned. And if it does get assigned, I will sell a call and that's bearish. See the bear? Now the reason it's bearish is you don't want the stock price to go too high above your strike price, because then you'll miss out on potential capital gains. All right. So some quick things on options. Why do people do it? Well, the flexibility, for leverage, hedging, and income. Also, some quick notes here. The buy call is where you pay premium. And you don't own anything, but it gives you the right to buy at a designated price within a specific period, okay? The sell call, you collect premium and you do own the shares, and this is where, you're selling the right to buy at a designated price within a specific period, okay? Again, if you want like a slower version of this, feel free to check out, the videos I have I have an options playlist, so you could check that out. The buy put is where, you would pay premium. You actually own the stock. This could be like, a form of hedging, they say. Gives you the right to sell at a designated price within a specific period. And then last but not least, selling puts. You collect premium. You don't own the stock, but you're selling the right to sell at a designated price within a specific period. All right. Sell to you. They could sell to you. And then there's the reason there's options is because of market makers. There's always someone on the other side doing the trade. It's not just me, you, and Joe Schmo. There's actually just people called market makers. And a market maker is a firm or individual that stands ready to buy or sell a security. They're the ones that really decide what premium should be paid or given, right? All right, so that's the summary on options. Hopefully that helped. Now I'm excited for this tab. So let me zoom out so you can see how cool it looks, right? It's the wheel, right? It's the wheel in action. So you guys may not be as excited as I am, but anyway, so I'm starting the wheel strategy on TSLL. TSLL is a 1.5x leveraged fund, which mimics basically the movement of Tesla, times 150%, okay? So it moves 50% more than Tesla would move normally. So what am I doing? I'm selling puts. So when I sell a put, there's three things that can happen, right? Again, when you sell a put, what do you want to happen? You want the stock to go up above your strike price. If it does, then the option expires worthless and you collect the premium. Well, you collect the premium up front, but you'll get your collateral back, at expiration. Now, so in the example to the left, when it goes above the strike price, you can either buy to close it early out if you decide, okay, say you sell a put on Monday and then on Tuesday the stock goes up, skyrockets, and it's so cheap to close it, early that you do that. There's a reason, to do that. If say you get like 50% of your gains within one day, then that would be an example of where you would buy to close. So if it's above the strike, you could either buy to close or you let it go and expire worthless, right? And then you collect the collateral back. And then as you can see, the arrow pointing down, after that, you'll sell another put. And then you go into that same exact process all over again, okay? Now, if in all examples, whether the put is above or below the strike, you can actually roll it whenever you want. The issue with that though, sometimes the roll is not always profitable. So for example, you know, when you sell the put and the stock tanks like really bad and you're trying to roll it, there could be a point in time where you're actually paying premium in order to roll it. Like if you want to roll the price, you know, back down because you don't want to pay it at, you know, whatever the strike price you had. So again, you can roll it whether the stock, you know, the underlying stock is above the strike or below the strike. And once you do roll it, that is what you do at the same time. You do a buy to close and a sell to open, okay? And then guess what? You have a new put. So that's why the arrow down goes right back to the sell put. So then you deal with the same 3 scenarios again after you sell that put. Now, there's also the situation here where I actually, you'll see in a second, I'll show you, I sold a put on TSLL for $10 and it actually expired below. So TSLL expired below. I did not roll it and I let it expire. So since I let it expire, guess what happened? I got assigned. So when I get assigned, they keep my $1,000 because that's, you know, 10 shares. I'm sorry, no, 100 shares at $10. Okay, so that's $1,000. So that already left my buying power anyway. So now they keep that, but I get 100 shares of TSLL. So as you can see in blue, I now own the shares at strike price. So what am I going to do? If you look in blue, I'm going to sell a call. So now the wheel is in motion, okay? In the other 2 examples, you're stuck in the put, right? You're not really doing the wheel yet. You're just stuck like, you know, on the one side of the wheel. So you can stay stuck there and that's okay. That's fine to stay stuck there. But if you do get assigned, then the wheel's moving. Then you're on the other side of it. Then you're selling calls. Now, what happens when you sell calls? Well, again, when you sell a call, you know, that's not bullish. Selling a put is bullish. Selling a call is bearish. So if it expires below the strike price, again, here's 2 options just like before. You can buy to close it early if it's worth it, or you just let it go, expire worthless, and then you keep your shares. And if you keep your shares, guess what? You're going to sell another call the next week if you deem, you know, that it's worth it, right? It all depends on the, you know, the right premium. You got to get the right premium. And then similar to the other, you know, when we talk about puts, you can always roll. You can roll a call at any point in time. Like Monday, I could sell a call in the morning and then roll it Monday afternoon. I can roll it a minute later if I wanted to. It makes no sense, but you can. So again, a roll, it would be a buy to close and sell to open. And then obviously I'd be selling a new call, hence back to the sell call. But if I sell a call next week on my shares and I sell a call for $10, I'll collect the premium up front, okay? And if it goes above the strike, then guess what? By the way, I put near or above because you could, you know, sometimes you could get assigned, you know, even if it's just reasonably close. I know that has happened on some stocks. But either way, if it's above the strike, we'll just use that example, you'll get assigned, okay? And then what happens when I get assigned? I have to sell my shares at the strike price I chose, which is $10, and I lose my 100 shares of TSLL. And then guess what? The wheel starts all over, and I go back to selling puts. Why? Because I got my money back, right? They sold my shares, but they gave me $1,000. You know, 10 shares, 100 contracts, $1,000. And now I'm selling puts again, okay? And then the same process begins again. So hopefully this little chart here helps you guys out. Again, this is really the wheel. I know I didn't shape it like a wheel, but I did throw a picture of a wheel. So that hopefully, you know, helps you out. But yeah, that's pretty much it, you know, and it shows you how it works on each one. I could share this if you guys want. Just let me know. I'll throw it in the Discord. But Hopefully I explained it well enough, though. All right, so that was the part I was mad I didn't cover in the first video last week. But now let's get to some of the option stocks that I put on my list. Thanks to some people on Discord, they told me about it. All right, so I have TSLL, and that's the one I'm going to use for now, for a while. And I don't plan on using any others, but for now I'm just going to make a list. Someone told me about TSL. That's a Tesla one, but it's 1.25x. So that's a little safer, and it's cheaper. I didn't know about that one. But it's all good. I'll leave it there. Maybe I'll use it. Maybe I won't. I don't know. And then there's ABR, Arbor Realty. That one is a REIT, and it's very volatile. I think because there's a lot of people shorting this company. They want it to fail, essentially. And then there's Bitto. Bitto is a ProShares Bitcoin strategy ETF, very volatile too. I know my 30-day IV is not working, unfortunately, but I'll get that fixed at some point. And then there's SOXL. That's the Direction Daily Semiconductor 3X shares. Okay. Now, again, anything 3X, that is insanely volatile. So I'm not messing with any of these right now except TSLL. All right. So let's go into TSLL and just see, like, over the past week how it did versus Tesla. So what do we have here? So if you look at the 21st, TSLL went up 0.73%. No. Yeah, it went up. Okay, yeah. No. Tesla went up 0.52. TSLL went up 0.73. Yep. Yeah. So, I mean, long story short, on the right-hand side in blue, I just want to make sure it's around 50%. Because to me, this fund is supposed to be a 50%, change as compared to the underlying. So as long as that makes sense, then I'm okay with it. I don't, obviously I should trust how it works. But again, I just need a little comfort level because I've never really messed with leveraged funds. But this is my verification that it is doing what it's intended. All right, so let's talk about what options I've been doing. So, get a sip of water again. Last week, I had one transaction. It was on row 2. I sold a put, $10 strike, 0.4% out of the money, a little tight, really tight actually. I was hoping TSLL would close above $10, by this past Friday. I got $35, 35 cents per share times 100, $35 for my trouble. That's the premium. I fronted 1,000, and essentially that, since I fronted 1,000 and I got 35 bucks, that's a return on investment of 3.5%, or income per day of $5, or return on investment per day 0.5%, or if you annualize it, it's 182%. So however you want to look at it, it's good profit. This one, I let it go. I let it get assigned because TSLL closed below the strike of $10. So guess what? Next week, I'm going to sell calls if I deem it worthy. Actually, if I go to the options chain right now, you go to the NASDAQ options chain and pull up the calls. March 1st is Friday next week, right? So if I go to the $10 strike, you can see there's a couple columns here. So you see the strike. I'll go from right to left, right? That's the $10 strike. It shows you the open interest, the volume, and then this is the ask. This is what sellers are asking for. They want 16 cents per share. This is what buyers are bidding, 15 cents per share. And then the last transaction went for 16 cents per share. So in summary, if I sell a call for $10, that expires next Friday, as of right now at least, I'll get 16 cents per share or $16. Is that worth it? Maybe, maybe not. I'll run the numbers. It's kind of like, it's basically half of the total premium I just got for shelling out the 1,000. So it'd be about, 0.25% ROI per day, which is still pretty good. Again, I just, I don't really have a min or max I'm going by. I'm just going to make sure it's reasonable. I'm getting a decent return without taking, too much risk. I started this off, this was risky for sure. I was only 0.4% out of the money. So this was risky, but I was okay with it because I was ready to let it get assigned and then lower my cost basis if needed. Not the smartest, again, but again, I'm good with it. I had to start. I was going to do it no matter what. All right, row 3. So on February 20th, I sold a put with a strike price of $9, okay? And I got 15 cents per share, okay? So $9 strike times 100 is $900 I'd have to front, okay? So return on investment, well, I'm not going to show that yet because I did close early. So if you look here, the expiration date was Friday, this past Friday. I decided to close it the following day. Why? Well, because TSLL went up. So I closed it out at 4 cents. So I got 11 cents out of the 15 within one day. So I thought that was a pretty good return. So now my ROI per day on that transaction is 1.22%. So income per day, I basically got $11 for one day, you know? And then annualize that, that's 446% return. So to me, that was a no-brainer. So I did a buy to close, as you see in the action column. And then February 22nd, I sold another put for $9, okay? And that one was 16 cents per share, or $16. And that one expired next week, next Friday, March 1st. However, right after I sold that put, on the same day, Tesla went up. And guess what? Look how much I closed it for, 8 cents. So I got 50% of the premium profit in the same day. So that to me was also a no-brainer. So if I look at this, okay, yeah, I shelled out 900, right? So my return on investment was 0.89%. I got $8 income in one day, an ROI per day of 0.89%, or an annualized yield of 324%. And again, that was a buy to close because I sold the put. The stock went pretty high up from that, right after. So I did a buy to close. Rather than wait it out, I did a buy to close. We talk about this a lot in the YieldMax, videos because sometimes they have a chance to buy to close to get out of the position. And the reason I would buy to close is because, number one, I could take 50% of my profit within the same day. And number two, Tesla can go back down the following day, right? And it pretty much did. So on Friday, February 23rd, I sold yet another put, this time with a 950 strike. So I'm getting a little riskier. I was using 9. The money wasn't there at 9, so I did 950. So I only went 1.3% out of the money. Again, this is risky, but it'll lower my cost basis should TSLL stay low. Because again, I own 100 shares at $10. I can't sell calls on that unless TSLL is around that price. So if TSLL continues to go down, then at least if this 950 gets executed, then my cost basis will be 975. So that'll drop it a little more. But either way, so this is open. It's open for 7 days, okay? I got 26 cents per share or $26. And that's 2.74% ROI, income per day as of now. Again, if Tesla goes up Monday, I could possibly close it early, take the profit, and go. ROI per day right now, though, 0.39%. Income per day, 371. And right now, annualized yield on that, again, if I did this all year this way, 142%. So we'll see what happens. Right now, TSLL closed at, actually, what do I have that? I think I have that here. 950? Yeah, it closed at 950. Wow, so I'm right at the money, all right? So I need Tesla to go up next week and stay above my 950 strike. If it does, I have the option to buy to close early or just let it expire. If it goes below, then what I can do is I could sell puts at $9. So I have additional funds. I'm ready to sell more puts at a $9 strike to bring in additional income. Now, total premium, I'm not really tracking that anywhere, but if I click this, it's going to give me some, no. Let's see if I could just do this. All right, so I made $80. It's really just been the 1 week. So far I made $80, you know, and I'm playing around with 1,000, you know, 1,900 bucks, maybe almost 3,000, right? So again, it's harmless play to me. I'm playing it safe. I'm playing it on a cheap stock, TSLL, and honestly, I'm having fun with it. This is doing the options yourself. Yes, it's a lot of fun. It's kind of annoying at the same time because you're looking at the screen a lot, and sometimes you just don't have the time. So you know, it's good and it's bad, but I have fun, and I'm happy to track this for you guys to hopefully show you guys what it would look like doing this on your own. Again, I am by far not any type of options expert here. I just know the basics. I know the wheel strategy, and that's all I want to know. You know, there's other things that I should know, and that maybe I will in time when I have, you know, more time on my hands. But right now, I just like the wheel. It's really simple. So I just wanted to share that with you guys. So I think I've been doing pretty good. Obviously, you know, I want Tesla to go up next week so I can sell calls. And guess what? If TSLL goes to 1050, I'll sell a call with my 100 shares at 1050. But I don't mind selling it at 10, you know, because I could sell that in the money and essentially, you know, get premium. It's all about the premium. I don't want to sell at a loss, though, so I would never sell for a strike price lower than what I got assigned at. That's the key. That's why I need to have extra money in order to sell additional puts to lower my cost basis. Remember, we talked about the rescue mission. So right now, you know, row 5, I have a little bit of a rescue mission right now, rescuing the $10. But I think I could sell calls next week, you know, hopefully get like 15 bucks, you know, for just sitting there, right? And if it gets executed, whatever, so be it. Or, you know, it depends. If Tesla goes down on Monday morning at the open, then I'm going to wait. I'm not going to sell calls. I'm going to wait till it goes up because it's not going to be worth it to me. But if it does go down, then guess what? I could sell that $9 put we talked about. So again, I hope some of this made sense. If it didn't, leave questions in the comments or join the Discord. We have an options channel where we can have this, you know, discussions about this. But hopefully you guys, you know, had fun with this, learned a little. And if you want this spreadsheet, you know, let me know. I don't mind sharing this spreadsheet. As always, well, let me just say this. As always, this is not financial advice. I'm not a financial advisor. This video's for fun and entertainment, okay? Now we will go to the swing trades. So let me just explain to you my strategy real quick on this. And I'm not recommending this by any means, okay? So my plan, since I monitor Tesla and coin on a daily basis via the covered call ETFs, I kind of have an idea of what is considered low, what is considered high. So my plan is to buy 5 shares each day if the stock goes down. So an example, for this again, this is Tesla. January 25th, I bought 5 shares of Tesla. My cost basis was $185, okay. And then same day, it dropped to $181, so I bought 5 more, okay. And then on February 5th, it dropped again. So I bought, you know, I bought 5 more. And then February 13th, it dropped again under my cost basis, and I bought 5 more. And then finally, you know, at that point, my cost basis was around 182.88. Tesla went to 200. I did a limit sell, 5 shares. I sold 5 shares for 200. I got $1,000 back, okay? So that's pretty much what I'm doing. You know, right now, Tesla, you know, it's not, it's at 191. So I'm not selling. Yes, it's above my cost basis, but I told myself I'm not even going to consider selling unless it goes above the 200 range. So if it decides to go below my average, this is my latest average, 182.07. If it goes below that, I will buy 5 more. Each day it stays below my average. But if it stays at the 191, I'm not going to buy anything because I'm not going to average up. So hopefully that makes sense. And I'll show you what I'm doing with coin, which is the same exact thing. So here we go. Last week on February 20th, I bought 5 shares of coin at 174. And guess what? Of course, it went down. So I bought 5 shares more. This is the same day. You know, I got a little crazy, but I bought 5 more at 170. Okay. And then guess what? It dropped even more. So I'm like, you know what? Screw it. I'm going to buy 5 more. and I bought 5 more at 164. Then at that point, my average was 170. And then it dropped the next day to 165, so I bought 5 more. I got my average to 168.86. And then on Friday, it dropped again. So I had to buy 5 more because it was below my cost basis, and now I'm at 168.05 average. I have 25 shares of coin with a 168.05 average, and currently coin is priced at 165.98. So guess what? If it opens Monday and if it goes down, if it stays below my cost average, I will be buying 5 more coin, okay? And you remember, it could go down a lot, but as quick as it goes down will be, it can go up just as quick. So as soon as it goes up, I'll be selling profits, I'll be selling for a profit, 5% gain, 10% gain, and then I'll do it all over again. So right now there are no gains. I didn't get to sell anything on coin yet, but I'm okay with that. Again, it's all about keeping cash aside to do this. This is what they call swing trading. Something I never really ventured out because I just couldn't control myself, but now I'm pretty level-headed at my old age, so that's why I'm dipping into options again. Obviously, I'm dipping into the swing trading. The options I'm doing in my taxable account, FYI, and the swing trading I'm doing in a Roth 401k. So I won't be taxed on any gains on that in case I do really good. You never know. Who knows? When all's said and done, I could have 100 shares of coin. But let's hope it doesn't get to that. It's also, the hard part is actually selling, not buying. The hard part is actually knowing when to sell and take the profit. So, as you can see, I did so far on Tesla, so I will do it again, and I'll do it on coin. So, that's my journey so far. So far on coin, I spent, $4,200, and on Tesla, I spent $2,600, okay? So that's how I'm doing on the swing trading. That's my strategy. Hopefully that made sense. And obviously we talked about the options and how I'm doing. I'll try to combine the two. I think it makes sense too, because people who like options typically don't mind swing trading. So I may or may not, I'll probably combine the two. Who knows? We'll see what you guys say. But you guys always let me know. But yeah, that's all I got. Again, this is my strategy, and this is by no means the right way, nor am I saying it is. This is just the way I am comfortable with. It's the way that I do it, and I can sleep at night. I'm not recommending anything here. Please do your own research, do your own trades. The reason I'm showing you guys this is so you can learn from either my mistakes or my success. Right now, I didn't make any brash mistakes. Obviously, the first put I sold got assigned. Realistically, you don't want that to happen, but that's okay. Again, I'm okay with it based on the situation, but you get the gist. But anyway, I hope you guys enjoyed the options and swing trading update. If you did, please click the like button, and please let me know in the comments below if you would like a weekly update on this stuff. And I'm more than happy to do it every Sunday. Today's actually Saturday, but I'm going to post it Sunday. I don't want to overcrowd my videos in one day, but yeah, I'll launch this Sunday around 2-3 p.m. We'll go from there. All right. Anyway, guys, thank you for watching, and enjoy the rest of your weekend. Later.